Right, and you are just in time for your weekly most comprehensive look at the world of business, finance and economics. Welcome to another episode of Business Redefined. We want to talk about matters regarding accrual accounting, and that is a subject which has elicited a lot of reaction ever since we put out the poster. And we are delighted to have the CEO of the Public Sector Accounting Standards Board, FCPA, Fred Riaga. Karibu sana.
Thank you very much, Julian, for having me.
Karibu. Before I engage him, let me just mention that the Treasury has put out a statement indicating that the first payment for the government-to-government fuel deal with the Gulf giants has been made. About 35 billion shillings worth of payment. That's about 238 million US dollars. And that was made for 3 letters of credit. Remember, this deal was inked by the government and the Gulf majors sometime in March to try and address the pressures that the Kenya shilling was facing at the time and to address the interbank squeeze that was prevailing in the market. So we shall be breaking that down for you in the 9 p.m. bulletin. But for now, let's come back to our conversation on stage. And FCPA Fred Riaga, many Kenyans have asked me that from the moment we put out the poster, help us understand what's the distinction between cash accounting and accrual accounting?
Thanks, Julian, so that I indicate. Thanks for having me on the show to break down matters financial reporting. Cash accounting is elementary basis of accounting for your transactions in any given year. You essentially book transactions as and when cash moves. So if a business person moves in and buys stock, for instance, and pays for them cash, that is the point at which a recording is made within the books. If he calls in and says, please supply me goods, I will pay you next week, under cash accounting, that is not booked. So you wait until the following week when the actual cash moves for you to make a booking.
Yes.
Now, for accrual accounting is the more developed and the more comprehensive basis upon which businesses, governments then account for the resources that they consume. Essentially, you say that at the point at which a transaction is booked,
Never mind whether cash is moved.
irrespective of whether cash has moved or not, you book that transaction because you have already created an obligation.
Yes.
So if it was stock moving in, the expectation is at some point in time, you are going to make that payment. And for you then to think comprehensively around how do I manage my cash, the cash that I expect, then you book it into your books knowing that in as much as I'm expecting this amount of money, part of it has already been committed.
Yes,
So that
yes.
is accrual accounting.
Yes. So it helps you with forward looking as far as your management of your liquidity is concerned. But here's a big question that is being asked. Last week, the Office of the Controller of Budget put out a statement. They were presenting before the National Assembly Budget and Finance Committee and indicated that the stock of pending bills, state arrears as we like to call them, pending bills, has now surged to about 730 billion shillings. And the question that I'm being asked is it because we are still heavily on cash accounting?
Predominantly, yes. If we were on accrual accounting, then it means the point at which a government agency issues an LPO, then an entry is already made within the books that were expecting to spend X amount. We have already spent it, notwithstanding the fact that the cash has not moved. So I think for when you look at the negative aspects around cash accounting, it is one of the framework on cash accounting is the strongest reason for which we can then say that pending bills is generated.
Yeah.
But there are other significant causalities, Julians, that we can then take advantage, possibly when time allows, just to run through.
I see. And just for the sake of our audience, LPU is a local purchase order. But maybe flesh it out for us. When you talk about the demerits of cash accounting, could you give us more color around that?
When you speak of cash accounting, you essentially say you do not have adequate space to plan. So that's the first instance. Point number 2, you lack visibility on certain aspects of what would inform your financial statements. Julian, I know you're fairly well versed with the framework on financial accountability and financial reporting. For instance, we move now into capturing your assets and liabilities within our books. Within your books under cash accounting, you do not expect to see liabilities. You do not expect to see assets, yet they form the core components of service delivery ability of an entity or the profit earning capability of an enterprise. Yeah. So that leaving out those 2 components is a serious demerit of cash accounting. Point number two, under cash account, because you are leaving them out, then you onboard significant risks. For instance, if you buy cars and you're not booking them within the books, it therefore means that there are significant risks around usage of these assets. If it disappears, you do not have visibility of it within your books, so ability to trace it back into your financial statements is therefore missing, so there are significant risks with that. Thirdly, the comprehensiveness of cash accounting as compared to accrual accounting. Remember, we have then pointed a picture that accrual accounting gives you the ability to forward look. How much do I expect in terms of funding my cash flows into the future? Cash accounting does not give you that. So as a business person, when you are then sitting there, or a government agency, you're then thinking of how do I prioritize my activities. Cash accounting does not give you that capability.
I see.
Thank you.
FCPA, ever since I did my first big interview on NTV sometime in 2018, and I was speaking to the Auditor General, we have been having this back and forth about the need to have the public sector fully compliant with accrual accounting. As we speak, where do we stand, and what's the headache about this transition?
Thank you, very good question, and I'm so happy. I say I'm happy, Julians, because for the last 3 or so years of my leadership at the board, we have had this conversation. And I'm so happy that there are very positive things about the Kenya Kwanza administration. The leadership came in, and the first question that they asked, why are we not on accrual accounting? What is it that is barring us from having a proper visibility of what it takes or what it costs to deliver government services? And we therefore said cash accounting is one such inhibition. Now, so where we are, as we speak, the board which I work for, the Public Sector Accounting Standards Board, has had serious consultations with the National Treasury, with the PS, with the CS of the National Treasury. And the board, as per PFMA Act, Section 193, 194, has then said that we need then to move from cash accounting to accrual accounting effective 1st of July 2023. And we've had conversations with the National Treasury. And I'm so glad that these conversations has even been picked up at the cabinet level, where a CAB memo was presented awaiting adoption. And then the reason why we then scale it up at cabinet level is for the simple reason that this is going to be a huge PFM reform that would require a whole of government approach and has the necessity for buy-in at the highest level. So in terms of our preparations, so we have initiated the whole idea of where political buy-in, so that we secure the political buy-in at the inception, which is at an advanced stage. We put a tick against that. Then point number two, then we're also saying that there are preparatory steps that we must think of. There is a cost system that would process the accrual-based data for you to generate accrual-based information and reporting. There are limitations around that. The integrated financial management system is operational by the National Treasury, and we are happy that government has then initiated steps to reconfigure it to anticipate accrual accounting so that we're able to bring in our assets and liabilities, which always miss under cash accounting. Then point number three, we are also saying that the core competencies required to run an accrual-based system. We, as the board and the National Treasury, saying that we have initiated steps to capacity build accountants just to come in so that when you say that now you need to bring in your books, assets and liabilities within your books, then you have the core competencies. The other step that we have also taken in anticipation for the move is the board, working closely with the National Treasury, has approved the National Assets and Liabilities Management System. And as we speak, I am aware that at the National Treasury, we are at advanced stage to configure a system that would automate the process of asset management and liability management as well. So that is a core step, because the whole bit about identifying what our assets and liabilities are. Remember, cash-based entries, we already have visibility of them. What we do not have clarity on are the assets and liabilities to complete that cycle. So the whole process of identifying them, then apportioning adequate value for purposes of bringing them into the books is now the next step that we are moving into. I would gladly say that we are, the processes are moving in tandem with a desire for us to adopt these important reform agenda.
Before we take a very quick break, the quick question, follow-up question to what you've just raised is something I wanted to even ask you is to what extent is IFMIS, the Integrated Financial Management System, adequately prepared for this transition, and more importantly, cascading it not just at the national level, but as well as the county level?
Julian's IFMIS is Oracle-based, which and the original configuration of IFMIS anticipates accrual accounting. Unfortunately, because we were on cash accounting, the whole system had to be deconfigured to anticipate to facilitate cash reporting. So as we speak now, the conversations we are having and which the steps that the National Treasury is undertaking is to re-engineer IFMIS so that we are able now to bring in the fields or the modules to capture data on assets and liabilities, which would then complete that very cycle. And the process is the last time I checked with the director of IFMIS at the National Treasury, they are moving well just to get that system up and running. Of course, taking cognizance of the fact that we have a July 1st, 2023, with expectation that come September 2024, we essentially, all government agencies would then be reporting on accrual accounting. But Julian, I would also say that yes, as we transition government, we appreciate that going a little technical around this. One of the standards that guide the process of adopting accrual accounting, IPSAS 33, on first-time adoption, creates a pathway. We are essentially saying that we do not expect perfection in the first year, but we are then saying over the next 3 years, then we would have attained a level of perfection to bring in all our assets and liabilities within the books. Consequently, the processes are in place and they're moving well towards this date. We are just waiting for formalization by the cabinet. Then we move in earnest.
All right.
Thank you.
And just before we take a break, let me just mention to our audience that when FCPA Fred talks about IPSAS, that is the International Public Sector Accounting Standards, and there are a number of them, but of course he just highlighted 33. We shall continue breaking it down to a level which we can all access and understand why this is important for us. Let's take a break. We shall be right back with a lot more on this conversation. Welcome back to this conversation on Business Redefined. Tonight we are talking about a relatively technical subject, and that is the transition from cash accounting to accrual accounting. And in part one of this discussion, we were laying the ground in terms of why this is important, where are we as a country about this transition, and what progress has been made so far. And we want to get to the tail end of this conversation. FCP Ariaga, welcome back. There is an impression out here that we are nowhere in terms of progress as far as the number of state agencies which are now compliant with accrual accounting. What's the landscape looking like in terms of those who are compliant and those who remain?
Thank you, Julian, and for giving us the platform again to just address that point of misinformation. Now, when you talk about financial reporting in the public sector in its entirety is not on cash accounting. We have made significant strides in terms of moving sectors to accrual accounting. For instance, all state corporations, both national and county, are reporting on the basis of accrual accounting. So they are all on international financial reporting standards, the similar standards that the banks apply. Which is accrual based. Point number 2, we have all level 4 and level 5 hospitals across the entire government are reporting on accrual accounting. Point number 3, all cities and municipalities are reporting on accrual accounting. All water companies which is which are utility firms, are
Yeah.
all on accrual accounting. Then all universities, teachers training colleges, and the TVETs are all on accrual accounting. So that means that the only sector of the public, the only portion of the public sector that is on cash that we are grappling with to move them into accrual accounting is then the MDAs, the ministries, departments, and agencies that are service-based. For instance, my organization, which is fully funded by the Exchequer, being a semi-autonomous government agency, I'm on accrual accounting already. All the regulatory bodies, the likes of the SASRAs, the Capital Markets Authority, they are all on accrual accounting. So we've made some strides, Julian, in terms of just getting an understanding. We've created best practices that we can borrow from as we then move the remaining portions of government to accrual accounting. I think it's significant also to note that the preparatory steps that I made mention of, the national assets and liabilities policy, and the whole system and the ecosystem around assets and liabilities in terms of identification and measurement, is a move towards getting the MDAs into accrual accounting. Point number two, from the board's point of view, we have adopted the standards, and as we speak, we already have the templates that should guide the MDAs into reporting into what? On the basis of accrual accounting. So any MDA, and as we speak, already 5 MDAs. We are piloting with 5 MDAs, which are already on reporting on accrual accounting. So when as and when the decision is then taken, then we'll just blow it out and bring the rest of the MDAs into accrual accounting.
Okay.
Thank you.
But then the question emerges, and I just want to pick one example that you've given. If the universities, for instance, are on accrual accounting, and we always tout accrual accounting almost as a silver bullet, why do we see them still struggling with a lot of financial problems in terms of they have backlog of payments, etc.? I can give you an example. 3 universities in this country are on the IMF list for restructuring, and if you look at their liabilities, for instance, they are crazy, vis-a-vis their assets, of course. So how do you explain then that coexistence that we have fully transitioned? And I know they could be having structural issues, but then we still have these problems.
Julian, you know, management or the business models that an entity adopts would then define its general outlook in terms of sound financial practices that they project. You don't expect financial reporting to address any of the weaknesses within the business model that you may have employed in running your business enterprise. We all know the sorts of operating environment within which the universities have operated within, and consequently the cash flow constraining environment that they operate within. But you see, the accrual accounting also should come in to tell us, to disclose their financial health. It should come in and paint a picture as to, you are saying this, you're positioning XYZ as a public university, but is it sound? Is it technically insolvent, for instance? You can only adduce that by looking at the books as presented on accrual accounting, as stating that the liabilities that these universities reporting far outweigh its assets, and consequently you're arriving at the situation of technical insolvent of the entity. But remember, ultimately, the whole idea of what sort of a business model has informed the business operations within the university would then project it as either being financially healthy or unhealthy.
I see. As we get to the close of our conversation, so we see a number of state entities struggling with adhering to the reporting cycle. So the question emerges that to what extent would this transition then remedy this reality that we face every so often, that we get these accounts to the Auditor General in good time and it's made public within the required time frame?
Thank you, Julian. The board reviewed the reporting templates that it put forth. And last year we then said, for us to achieve the stringent or the very tight reporting timelines, we need a facilitative reporting framework. And consequently, we as a board then said that we aligned the reporting framework against that of the private sector. And I always use the example of Safaricom, for instance. The sheer size of Safaricom, the number of transactions that they undertake, the revenue base would be much bigger than most of parastatals, most of ministries all put together.
Yeah.
But surprisingly, Safaricom has the capability of reporting after 31st of March, its year end. You would see latest 31st of April, they have their audited financial statements already published. Yep. Because, and so then I ask myself, what makes it possible for that to happen? Two things. One, automation. Mm-hmm. So when we go back to the whole idea of reconfiguring IFMIS, it is a critical step for us to achieve timely financial reporting.
Yes.
Point number two, we need then to embrace the quarterly reporting. I will tell you for a fact that for my board, I know that my board, Public Sector Accounting Standards Board, the Capital Markets Authority, and the Central Bank, the first three entities within the 2022-2023 that have been audited, and the Auditor General issued audit certificates for the simple reason that we have taken quarterly reporting seriously, so that when I present my quarter one, then I would have cleaned my books, undertaken all the reconciliations, and passed all the necessary journal entries to correct any mispostings within quarter one.
Yeah.
So that once I close it and I meet my report to the National Treasury, then it is done and dusted. When I come to quarter two, I would be focusing on just transactions for 3 months. When I move towards the end of the year, so that by the time I'm doing quarter three, I've essentially cleaned my books for the first 9 months of the year. Yeah. So that at the end, by 30th of June of the reporting year, then I'm only left with 3 months to focus on. So essentially, if entities can then give a focus on the quarterly reporting, then we would achieve the timely submission of the financial statement, because you're providing an accountability report. If it is stale, then it defeats the purpose for which financial reporting is then put in place.
Quick write-up to that is, do you feel, I mean, and I think the comparison with Safaricom might not be apples for this case, that do you think government agencies are adequately funded to have the human capital to actually turn this around?
I wouldn't say that there is any instance where I would say we have adequate finances. I once had a meeting, and for those that are responsible for public financial management and most of budget making and budget implementation, you face a trilemma. You have growing demands, you have diminishing resource basket, and then you have very shrinking space to borrow. The public itself that is increasing its demand for services does not want government to borrow. Yeah. So consequently, I think it's a case of us making do with that which that we have. Yeah. If we leverage on technology well, we have the capability of managing our accounting records well, managing our processes well, and ensuring the correctness of the figures that we put through, and eventually a sound financial reporting.
We have a minute to go, so maybe just give us your parting shot and just touch on what do you think is the core merit of accrual accounting?
The core merit of accrual accounting, Julian, is you essentially giving yourself the capability of having a global view. You're projecting into the future, and governments and businesses must be futuristic in their outlook. You're essentially saying, what am I going to be like? What is the business environment going to be like? Yeah. So you must have the capability to have that foresight. Accrual accounting gives you that foresight. And foresight in the sense that if your service demands is going to increase, then you afford yourself the capability of saying, do I have assets in enough volume to enable me support the service delivery measures to meet the demands into the future? Accrual accounting it's only route that makes that possible. And consequently, our burning desire to get it working within government.
FCPA Fred Rega, thank you so much for joining us tonight. Unfortunately, we have to close it at that point on this very important discussion. We shall have possibly a part 2 and part 3 of this discussion once we get to the rollout of this, covering state agencies, to ensure that we keep tabs on how this is impacting the perennial question of whether we can address fiscal leakages as far as the country's public finance architecture is concerned. Stay tuned to NTV.